Good morning. It's E for MarketWizards.com and eMiniWizards.com. And it's the 27th of November, Tuesday, and about 15 minutes before the open. Reminder to use risk capital that you can afford to lose if you're playing this game. Okay, we're looking at the two-day chart. I've adjusted yesterday's range to include the 28.5 gap to make this a little bit more symmetrical the way it should be. That was our premise yesterday. Let's use the 28.5 rather than the print low. We got 76.25. You'll note how the 52.5 became the middle of that trade. Overnight, we had a 55 hold, which we had said make sure you're paid by 55s. Of course, it can go any place once it wants to, but theoretically, that's where you want to make sure you're paid. And then, obviously, anybody who went to bed and went to sleep probably didn't participate in any of this, and we get to wake up and say, okay, so what do we do? And you make your observations noted on where the market actually traded. So we took out that 76 to 78 area that we had said was resistance. Popped up to the 85 zone and then immediately retraced and came right back down to the middle of that spike bar, right down to the bottom of it, and a little bit lower, shook out all those traders, came back up, 60 back, and then came back. And this is a double test, obviously, down here at the 55s. So currently the suggestion is, man, if you want to play early, that this is a double, and the attempt to get to the 62 to 65 area should be the game plan. Whether it gets there or not, nobody knows, but that's the call right now. I don't like shorting the lows. Sometimes you'll get away with that, but not really a good edge right there trying to short this low. We're going to pay attention today to yesterday's high. That's going to be a very key area. We're going to pay attention to this 52.5. So for now, that's the two-day look, and we've got a 61 where the market opened today, and we're going to use 69 as our gap, and we're going to call that resistance for now, and that will be aggressive resistance back there. If you play ahead of that on the short side, you're an aggressive trader, and even that in the middle is an aggressive trader rather than closer to the ends. Here's our weekly look. Again, adjusted for that low. We've got the spike high. We've got 87 as resistance right behind the last week's middle. And you can see that we really are in this box right here coming in into the two-day middle trying to hold. So that's the basis right now for saying try to get to 62 to 65s. And if it can't hold, then obviously market will want to come back and retest yesterday's 52.5 to 49 to 50 area right in here. That's the bottom of the pipe. Theoretically spend 40% of our time here. So I've highlighted this box right now saying pre-market, this looks to me to be the box that we are trying to resolve from yesterday. That's 72. So it just makes common sense to use that 72 and the 52 as support, and that makes 62 a middle in a zone. Just common sense. The predictive model, 56.5, theoretically our flipper for up or down. So far that's been holding. Got to the back end of our zone, typically back here at 75, this high right here. This is where stocks normally will abort, and we find E-mini goes 2 levels higher, 1 to 2 levels higher, better odds shorting. And you can see how that's played out. Same on this side over here. So got a big range right now, and I would not be surprised to see the low taken out today. And then the question is, can that 52 hold? If that breaks, then we open the doors to come backwards. We'll take it step by step. The fact that this got rejected so quickly tells me that there's a lot of sellers looking to hit bounces. Yearly frame, this blue circle. Remember the 75 and a quarter is the year's open. 85.75, the top of this box. 33 and a half, the bottom. We take that and we go to this chart and say, okay, break that down and show me. 33 and a half to 85.75, and we can see where this middle is right here at 60. So theoretically right now, this is the box that's being resolved on a yearly scale. And we can see how fast this was rejected. So basis this chart, I'm suggesting that that 72 area probably will be again, an area of concern today, whether the longs can punch through it and stay above it or not. And you'll note that's right near yesterday's high that was rejected, and then spike high. So far we've not really held above that 72, and you'll remember that area was key for a long time, and we keep penetrating it and breaking back below it. So the market has not shown any ability yet to hold above that level. We're going to keep an eye on that. Here's our angels and demons. 57 and a quarter angel trying to hold. The demon, 75 and a quarter, near yesterday's high. So you'll note that a lot of times they'll spike through it, knock out stops, and then it immediately retraces. This is an ugly chart, really, with this bar. There's nothing symmetrical about this at all, just a stop run type of trade and came right back down. Now, I guarantee you, if you were trading last night, very difficult to understand that play. A lot easier in hindsight to say, okay, it was rejected. But if you're in the moment and this thing is pushing up, I mean, this is from where the low of that bar back here, call it 62. That's over a 20-point bar. Come on, 15 to 18, anyways. Just spiked up and then comes right back down and retraces the whole thing. So I'm suggesting be conservative if you're a fairly newer trader. My goodness, these moves are tough even for people who have seen the markets. So here's our 15-minute chart. Globex trying to hold the rain line. Still got to get back up above the blue and red line. If it does, then it can start to climb again. But we're going to keep an eye on this chart as over and under saying more neutral, more range type. Let's take a quick peek at the 30. And we can see over and under on the 30. Here's our 60. Look at the 60-minute chart. If you scroll a little bit, you'll find the chart in play. And this is a classic example of going out a couple of levels away from the 15 and say, I get it. Okay, so this is what the chart seems to be in play, the 60. Yes, they got above it, but rejected up here at the rain line and at R1. Now trying to hold a pivot, and obviously this 58 zone. So we're going to keep an eye on this 60-minute chart just because we can see it's in play right now. Swing chart, clear. This 30 area support. Bounce up. We took out that 56 yesterday and spiked up above it. We've been holding that 56, 55 area. Spiked up overnight and rejected at this 84 area. Clear. So this is the box right now that we are looking at. That's being negotiated by the longs and the shorts. Absolutely clear. And if we break below this 56 area, And we open the door again to come back and test this box. And you'll note how that 03 support, we've not been able to get underneath this 30 area. And that was the basis of my saying last night, well, we could be testing 80. So got above 80 and then could not hold it and penetrated right back down. So today, very clear, the pattern right now is higher highs, higher lows. Probably a bear flag being built, but it could be more. I want to keep an eye on that trend line for now. And we'll use 62 as our pivot for the first opening rotations. And last chart for now is a 15-minute RTH, and you can see where it stalled at the 84s. And obviously we've got this 58, 59 area right now that's being negotiated. This is also an important chart to try to hold for the longs. And if we get below the blue line, then obviously anything goes coming back down this side. But for now, we're going to keep an eye on this larger term time frame chart. If you're an aggressive trader, understand that you're probably going to need several rotations today. And the goal, I am again reminding everybody, is to try to get yourself a few points, spread out your trades, use the movements of the market to help you as a business, not that you're going to guess every single wiggle. And if you don't like the open, then stay sidelines till you find a trade you like. Nothing says you have to be in the market all the time. So this is our 15-minute chart. We're going to go back to a 5. We'll see it a little bit faster, but just to understand these proportions. 5-minute chart, we've got the rain line and obviously the green line up here. So for now, we're opening in this zone of conflict between 68 and obviously this 60. And we've suggested if you can get to 62s to 65s, make sure you get paid.